Hi viewers, and welcome to Blitz Trader's first ever video. First of many. Today, I'd like to introduce myself as well as the ideology behind Blitz Traders, and even some tips and breakdowns on how we like to analyze our charts. We'll even use an example from our last winner that actually took profit, so you can use real data and real profits. And if you wait until the end of this video, we will even show you a pick for this week. So stay tuned. A little bit about myself: I like to play soccer and make music. So you know I'm in it to make a score. What? Nobody? Okay. Needless to say, both of those skills, both soccer and making music, require good timing. It was only natural for me to stumble upon chart reading, and specifically the candlestick chart reading. And ultimately, that has got me to creating the ideology behind Blitz Traders. I've been trading since I was 18, and I have my background in both stocks, ETFs, and Forex, and now I'm currently getting into options. But enough about me. I know you're here to actually learn and get into candlestick chart reading. So let's get to it. So there are many types of brokers out there. There's a bunch of free ones. There's even some that have some sort of commission fees or charges. But ultimately, it's really up to you to pick whichever broker that you feel comfortable with. I personally use Webull. Webull has a very nice platform that's very customizable, as well as one of the lowest fees possible for in commission and everything else. So Webull is a great pick. If you guys would like to get started and want to use Webull, I could also send out a referral code. I'll put the link below as well. But yeah, let's get to it. So there's multiple different kinds of charts. If you look over here, even in Webull, most other brokers, they'll either have the line like this, or they'll have the candlestick. But there are different kinds. There's also the area, as well as hollow candles and baselines. And there's also this one. I don't know how to pronounce it, so I'm not even going to try. So what I like to use is I like to use candlesticks. Candlesticks are very informational in the sense that you can kind of read exactly where the direction and what it's trying to tell you in a graph. So I definitely prefer candlestick over lines. And right now we're looking at the S&P 500 right now, and it shows kind of the gist of where the market is going, how it's looking, and also it's a good practice ground for you to actually practice your chart trading and see if it's working. First, pick the time frame of what you are planning to look at. As you can see, this is the daily right here. And if you look at the weekly or even a different time frame, you can see that it shows a different point. How I like to describe time frames, it's similar to like a microscope and how much you want to zoom in on something. So right here, this is the weekly, and you can see it's on a huge uptrend. But if you look at the daily, zooming in onto this little spot right here, and if you're trying to do some day trade, sometimes it's better to look at the hour. I personally like to look at the daily for different zones, checking the resistance levels, and then I'll zoom in even more. So 4 hour, let's see where it goes to. So it kind of goes down to this slope right here. So as you can see on the weekly, it was on an uptrend, but if you look at it in like a day trading aspect, you see that it's actually on a downtrend and might hit a reversal actually. It looks like it's starting to come back up. It broke its last high right here, and it seems like it's gonna try and break the second high as well. So we'll stay tuned and wait for that. Good to see the market always recovering. If you look at the 2 hour, it zooms in a little bit even more. 1 hour zooms in even more, and you see that it's starting to become an uptrend right here. And if you look all the way to the 15, you could even check the 5 minute, and then you'll get to see exactly what's going on. Figure out which time frames you like the most. A lot of people like to use 3 different types of time frame. One to see the zones and trends, the second one to see like an entry, and then the third to really just back check all your work. So for me, I like to use the daily. just to see the zones. If we're going to see the S&P 500, I would say the demand zone is pretty low right now. It's probably up to like here. Seems like this is where the last dip was. I'll make this color green, show you that it's the demand zone. And then the resistance level for supply zone, I would probably say it's probably somewhere here. You can even go higher, or even lower. I would say here is probably where they're going to get the most resistance. So as you can see, it's pretty low on the as far as the trend goes, and in the zone, it seems like it's a pretty good zone to buy. It's closer to the buy level than to the sell level. So, and if you want to zoom in more, I usually like to use the daily, and then I use the 1 hour. As you can see, it's super close to the buy level zone right now. It's not even closing properly for me to see the sell level. Yes. Okay. So this would be the sell. This would be the buy. It's currently coming down. It came down here twice actually already. And as you can see, it's kind of going up. This would probably be the first resistance level right here. So I would probably, if I were to get in, I would probably get in around 561 and then sell around 574 if you're trying to do a day trade. So you go to the 1 hour, you start seeing different spots where you can come in and come out at, and then you go to the 15 to really double check on those. Yeah, as you can see, it kind of skipped in, but it hasn't really touched back on here afterwards. So maybe come in around 564, and then you can exit same level over there, which was probably 74, right? 500, yeah, 574 and 35 cents, around there. So that's just to make it more, as like I said, with the microscope, to zoom in, see how much detail you actually want to get into it. I would say the pros and cons to it. The pros, sometimes if you look more for like the weekly and daily and you look for the further aspects of it, it's easier for long term, and you just get the general analysis of things, versus if you scope in too much to the 15-minute, sometimes it changes so fast that even if you are trying to day trade, the data that you're trying to use might be moving too quick and it might change too quick as well. So, and that's the basics of the time frames. The second thing you need to know about candlestick chart reading is the candles itself. This would be a pretty good example right here in this area. As I mentioned before, Webull is very cool and customizable, so you could really make any of these your colors. I don't know if you want to change the colors and make it your favorite color, but the general analysis, and I like to use the traditional way, a red candle means it's going down, and then a green candle means it went up. So there are two types of candles. There's the red stick that goes down, as well as the green stick that goes up, but there's also another type where you can categorize them, where you have this big huge body part that's long, and then if you can see, like there's like these small little lines that kind of pushes up outside. These big body parts with the full color are called the body, and then these little lines that are on top, they are called the wicks, hence a candlestick. So there's the body of the candle, and then there's the wick where you get to burn it. So with these two categories, they're like, okay, so what's the difference, or why are wicks and bodies important? The bigger the body is, it means that it has a huge push up or a huge push down, depending on what color the stick is. We classify that as a leg. So any full body with very little wick or even no wick, like this, for example, those we call a leg. Green is a leg up, red is a leg down. And then for the ones that with a small body and then huge wicks that are moving, those means that the price was going crazy within that time frame. So it was moving around a lot, and then it consolidated into the same price of close to where it opened. So to reiterate my point, big wick, little body, those are bases. As you can see, there's like a little base that's formed, and then there's a leg up right here. So big body, low wick, these are legs up. And those are the two parts of the candlestick chart that you really just need to focus on. So why are bases and legs important, and how do we identify them? Oftentimes, a base, when they get created, they are going to be our zones for resistance or demand. If it's a leg up and it's green, usually this base would mean that it's a demand. And as you can see, at 563, it actually was a pretty good demand zone right here. This created a nice base, a 3 base with one leg up, another base, but then another huge leg up, 3 legs to be exact. It goes to show that this probably would be a good place to buy in. And as you can see, within the next day, or actually in the pre-market, it drops down 563 and even drops down to 562. And it kind of goes up here, tests out the level, goes a little bit back down, and then in the market open, shoots straight up. I would call like a flagpole wedge. As you can see, this is the most recent, almost like a cup and handle, but it goes down right here, and then the market opens. First 2 hours, 3 hours of when the market opens is when it makes the most moves. If you were day trading this, you would see that it broke the latest high on the pre-market, and I would probably hop in right here, and then you could see that it did a pretty good job running up to where it did last time on the last leg. This was the base, went the resistance, then a leg up, which went all the way up to 570. Well, it went all the way to 579. Oh, sorry, 570 and 90 cents. But I would have just taken my games at 570, which that being the next high after this. So if you did this trade, it would have been getting in at the pre-market, kind of evening out, breaking even, and then taking profit. So that is the basic breakdown of chart reading. Now let's get into our last pick. Our last pick was MSTY. It is a yield max ETF, and they have really good dividends. What exactly is blitz trading? For me, blitz is similar to like the football term, where you want to blitz the quarterback, or you want to be very sporadic, fast, and attack, and then leave, or go without them realizing what happened or what hit them. What I like to do is I like to find the day of their dividends, see if it's already going on an uptrend, and so we will see when the ex-dividend date is, get in on the ex-dividend date or a day before the ex-dividend date, a good time to buy when it's going on an uptrend, when it's at a reasonable price, and then selling right after the ex-dividend date. So then you take profit off of whatever the stock is, plus you get the dividend. So it's a double profit. Most dividends, they go out either monthly or quarterly. A lot of people think that you have to hold it for that whole time, but really you just have to hold it before the ex-dividend date. And once you get it on the ex-dividend date, you could actually sell it right away. You don't even have to hold it even more. So I will always send out a pick for different dividends that are coming out, as well as I think when it's a good time to buy it. I'll show some examples right now. MSTY was one that I ended up finding back in the beginning of March, around, I want to say March 7th. I was doing my research on it, and then the actual date was March 13th for the ex-dividend date, so we just had to buy it a little bit before. And let's get to it. Let's get to the breakdown. Like I said, I like to check in from the daily first. If you look at it from the whole aspect, I think it's on it was on a nice uptrend, and then it kind of is dropping a little bit down, going back and forth with it. But if we look at it just from the day, it is consolidating pretty nicely right around here between had a crazy spike up too. I would say the zones are probably from here, which I don't know if it's going to reach there anymore because it's kind of been on a downtrend. These two will kind of be the zones right now. However, what we were looking at back in March was probably up to here. So let's see the exact date right now. For March. It's January, February, April. So around March 7th, which is right around here, this is all that we saw. I noticed that it just got to our demand zone, came in, and it's getting ready to push up. I know this is probably going to be the max of where it can go to, but this is kind of similar to where the first resistance might end up being. So I'm putting this right here just for the time being. I called it around March 10th, and I was saying we should go buy. It's at a nice price right now. It kind of went in, and it started catching up, or it started taking off without us. So I was like, maybe we should wait until it drops down again, or if anything, we can just buy it and then see it going up. It was generous enough to drop down for us and not even just hit our demand, but go all the way down to $16, which is super low. It's like, imagine it being on sale for you. And I knew that since it just got to the demand zone, it would be waiting to be pushing up. We will start zooming in now, because this is when we got to start breaking down the trade. So around March 10th area, this is kind of what we saw. We saw it went down. I sent out an alert. Those were the group chats and also Discord chat that we have, where I was just texting between either my friends or the Discord chat telling them, oh, hey, I think now might be a good time to buy. And as you can see, it went all the way down to, I think when I sent out the chat, it was right around $18. So it was kind of balancing out over here. There was some people that got it all the way from 16. And as you can see, it kind of consolidated right here where I had my demand zone anyway. So even if you got in at 18, you still would have made a good profit. 13th was right here. Honestly, even if you bought it at that time, you still would have had a good profit. If you got it on the 12th, 13th, this is around like the 1850, 1860 area, 1880. So if you got it anywhere around this average, you would have still taken profit, because within the next week, it went all the way up to, actually not even next week, that's in 2 days. On Friday, by the 14th, it went all the way up to $20.60, and we sold to make profit. Like I said, I put the first resistance level lower just so it can reach us, or get to a zone where it can actually be day trading. But as you can see, that is not even the highest. This was the last high. So I ended up getting an exit point right around 21 or $20.70, I guess. And it went all the way up to there anyway. It still kept going because it has a good push. It might even reach up to 22. So people that want to hold, you can hold. I always like to give out my blitz. I usually tell you where I want to get out, which was $20.75. There's some people obviously that held more and made more money than I did. And there's probably some people that probably made less because they saw it went to 20 and maybe they didn't realize, so they ended up getting out here. But regardless, you're still making profit from 18. This was our pick for MSTY. And for our second part, as promised, we will be giving out our weekly pick. And for this week, it is going to be BTF. For BTF, I called it out back on March 17th, or maybe even the week before after I got into MSTY. It's like March 14th. The week after, I was saying, hey, we should really get into BTF. I have the chat examples right here too, so you know it's real. And so BTF, I was looking at daily, see where the zones are. I would say that's a good demand zone. So right now it's under and it's making good deals versus the new high, which would probably be right here, but I don't think it's even going to reach that. So day time frame, you can see it's kind of been sideways, and then it dropped, sideways, then dropped. So these are 2 drops, and then now it's dropping again. So ultimately, this is a huge downtrend. We were trying to find some way to make money even on a downtrend. Dropped, went down to here. I noticed it's been going sideways. I was telling them, honestly, any price under 10.15, I believe, or 10.12 is a good price to buy. On Tuesday of this week, it actually ended up dropping down to there. It goes all the way down to $10. So as you can see, it ends up even going back down on March 18th all the way to $10. And that's really kind of the time when you needed to buy, because the ex-dividend was on the 19th. So I said, guys, let's just cop. For anyone that I told earlier, they definitely got it around $9, which was even better. And literally within the after hours, it was already struggling, but pushed up. And then today, it's even, or yesterday, it was up on a new high. Today, it kind of dropped down a little bit, but it is still far from $10. So again, making profit and selling it after the dividend date. I was originally supposed to release this video earlier so you guys could also get in, but due to technical difficulties and editing, it just took longer for me to take this out. We have now gotten to the final portion of this video. Thank you guys for watching. If this is something you guys like to watch or want to continue seeing more of, you guys could like, subscribe, and if you want to join also our Discord chat, I will put the link below right here. Also, comment any companies, stocks, or ETFs you want us to look at. I don't mind breaking things down. So if you got a submission you want to request, by all means, and it might be featured on our next episode. So let me know if there's any stocks you want me to break down for you.